welcome to another Gold Matters discussion, and welcome to our audience. Well, we call this Gold Matters, Matt, and it actually does matter more than ever now. I've been interested in gold for about 30 years, and have been heavily invested into gold ourselves and for our investors for 25 years. Um, and this is the end of an era, as we both know. We are both historians. We follow what has happened before. We know that what is happening now is inevitable. We never know the exact timing, but I started looking at this already in the mid 90s. I knew it was coming. I saw the debt growing. I saw the derivatives growing. And I was planning to enter the gold market for wealth preservation purposes. So we did in 2002, at around $300. As many people know, I even stood up at one of my daughter's weddings, and or wedding. She only had one wedding,
Right.
uh,
Good for her.
and told all the guests that they should buy gold at $300. So, I've seen this coming because history tells us that it always has to. The end of the monetary era means the currency collapses, and gold reflects that by going up in nominal terms. So, this is where we are now. And, now the world is panicking. Well, this is, as we both know, you and I, and you will talk about that more in detail, I think, which is, now the world is blaming Trump and his tariffs. Of course, Trump is wild. I mean, he's playing. This is like he's playing a computer game, a tit for tat. You do that to me, and I'll do that back to you, but twice as much to you. And
Hmm.
and tariffs go from 10% to over 100%. That's
Hmm.
obviously killing the world economy totally. You know, the free trade is what creates prosperity globally. The Romans, 2,000 years ago, always had they conquered all the countries all around them, Europe, Asia, Africa, etc. But there was always free trade, and that's why the economy around the Roman Empire prospered. Now it's the opposite. Now it's a trade war, and that's
Yeah.
going to kill the world. And the tariffs is not the reason for the markets collapsing. Yes, it is a catalyst. You always need a catalyst when there is an overbought market and dramatically overbought, as we can see, any measure we use, like the Buffett indicator to 200% of GDP, stock market valuation, which is crazy, of course, absolutely crazy. So it had to
Hmm.
collapse. Now it would happen to be the tariffs. Otherwise, it could have been a collapse of a bank, or it could have been, some political event, etc. So it was going to happen. It was predestined to happen, but it just happened to be now tariffs by Trump. Um, of course, this type of leadership by the world's biggest economy is a disaster for the world. You cannot play games and charge high tariffs one day, reduce them the next day, and then charge more again the following day. It's this kind of capricious leadership is very bad for the world. My view is that I like as you did that Trump was elected, partly because he didn't like what Biden was doing or Harris was going to do, and of course we thought there was a better chance of not having a global war or a nuclear war. But sadly, I think the combination of the kind of decisions, erratic decisions that are being taken now, and the fact that we are at the end of an era, and therefore I see now this is the beginning of the last leg of this monetary era, as I see it. We're going to have very tough times. I mean, I have been predicting that for many years, and now it is happening. Uh, and I think it's a great risk that Trump, because what's going to happen to markets, bond markets, stock markets, property markets, all asset markets, Trump will be seen as probably one of the worst presidents that has ever been at the end of this. I'm not trying to predict history, but I say there's a high probability that that will happen because any president that presides over the end of an era will suffer. Um, so a lot's going to happen, Matt, in the coming years because we're getting into the crescendo now into the acceleration phase of debt, of political turmoil, of civil unrest, etc. So, um, this is going to be a real jungle for investors to go through. But we are standing fast as regards how you should protect yourself. My firm view has been the same for a long time. Stocks, bonds, property, all the bubble assets are going to suffer. And that'll be the biggest wealth shift that has ever happened in history because this is global. And a lot of people will lose a lot of money. And gold is not going to go up. It's just going to maintain its purchasing power. So it looks like it's going up when you measure it in worthless currency.
Mhm.
But let's have a look now first at some of these trigger points because it's so fascinating. You never know how this is going to unravel the end of an era. But
Yeah.
clearly now the catalyst was tariffs, Matt. And take us through what's happening there.
Yeah, to your point, Egon, too, I want to be clear. You and I, since day one, have always thought of ourselves almost ironically more as historians than market mathematicians. I mean, we're very familiar with the markets and banking, and we have a lot of experience, you in particular. But, this is nothing new. This hysteria on the tariffs is certainly making easy headlines, political and otherwise. But as you and I have talked about, this market has been a huge red inflated balloon just looking for a needle or a bug looking for a windshield. And it could have been any number of potential triggers or catalysts or needles, a black swan event, a geopolitical event, a war, a bank failure, a rate policy failure. But, you know, at the end of the day, markets, which we've always thought were Fed driven and easy money driven and rate driven and frankly central bank driven, whether you look at Rome or you look at more modern capital markets, every market crisis is ultimately a liquidity crisis. There's just not enough liquidity. And let's be clear, when you're in debt up to your ears with 37 trillion in public debt and a debt to GDP ratio of 125%, you're a debt-soaked nation. You're a desperate nation. So you have a debt crisis. And a debt crisis is really just another name for a credit crisis. And a credit crisis is, of course, a liquidity crisis. And without getting into all the history, but just in recent memory, let's not forget it wasn't that long ago. In 2019, we had a repo crisis, which was a disaster. That was just a credit crisis. In 2020, the markets tanked by over 35%, but for unlimited QE, which followed. But the COVID crisis of March 2020, Egon, was just a liquidity crisis. And then, of course, in 2022, we had the higher for longer policies of Powell to quote unquote fight inflation. That failed. And we had the worst nominal returns in stocks and bonds since 1871. That too was a liquidity crisis driven by the bond market and debt markets. And then in 2023, you and I, we saw three of the four largest bank failures in U.S. history. That wasn't even a banking crisis. That was a liquidity crisis driven by a credit crisis. And here we are, April 2025, looking at tariffs, and it's tariffs. But no, it's no buyers for our U.S. Treasuries, no liquidity, no GDP, no P in the GDP, no tax receipts enough to cover debt. So we are desperate. The tariffs are desperate. And there is again, sadly, a massive, massive disconnect between the real economy in the US and what was a ripping, seemingly immortal stock market up until a few days ago. And I think now because markets are showing their weakness, people are actually realizing not only do we have a market crisis right now, we can now see the recessionary forces, which we've ignored for the last 2 or 3 years. I've been arguing for a long time we're in a recession. And I won't get into all the weeds, the proof. I've written ad nauseum about it, and it's only getting worse. I mean, retail sales are negative for gosh sakes, and bond spreads, all these things. The recession indicators are overwhelming. But
But Matt, coming back to tariffs, how can any sane leader believe that you can run an economy, a domestic economy, and therefore, since it's America, it also affects the whole global economy. How can you run that with making day-to-day decisions of going from 20% to 50% to 100% tariffs, which affects the whole world? Remember that China is the export machine of the world. They make
Yeah.
everything basically for the world. And
Yeah.
anyone could realize that taking tariffs up to 100%, I know it's a threat, but it's not just a threat, it's actually has been implemented.
Yeah.
How can you believe that that's going to benefit the world economy?
Well, you have to look at Trump's personality. I'm no expert on it. We all have our, I can, in some ways, you and I can defend Trump. In other ways, we're scratching our heads. I mean, he has a nostalgic, very patriotic view that America should be first. America can be first. It can be great again. That we are self-sufficient enough to be a mercantile, nationalistic, isolationist kind of economy, and that we'll get there. And that these tariffs in his mind, and again, to defend, to play the devil's advocate, especially when you're looking at 100% tariffs on China, to me, that's mutually assured destruction. We need each other's markets. But in Trump's mind, and I'm speculating, but I don't think it's a huge leap to answer your question, he really has a key goal to reshore what was outsourced in 2001 during the W2 when the American dream was made in China, when CEOs across the board in the US decided to go for cheaper labor overseas, primarily in Asia and China, and that all your Apple phones, et cetera, and lawn care products and even outdoor grills are actually made in China, from tech to simple goods. And if he puts 100% tariff on China imports, well, that means any company, including many, many, many American companies, realize they have to get their butts and their labor back into the U.S. So this kind of
Yeah, but
dramatic.
I agree with you. But the Chinese plan 50 years ahead, 100 years ahead. You take the
Yeah,
Silk Road and all of that. Now they're dominating areas in Asia, in Africa,
yeah,
in South America by a
yeah,
long-term policy of building up industry there or ports or whatever
right.
infrastructure that
Yeah,
they're assisting with. That's the way, whether we like it or not, that's the way to actually make major long-term changes in an economy.
yeah,
You don't make long-term changes by increasing tariffs from
yeah.
10, 20 to 50 to 100% overnight.
Yeah.
Um,
No,
I-
we're playing checkers.
yeah,
Americans are checkers players. I'm sorry, I love America. We're a young country. We're kind of adolescent. China is an old country. It has many problems, but it has a history of thinking long-sighted. It reminds me of an interview Ronnie Sturfeld, or a speech he made years ago in Munich with us. Like the American Indians, they think many generations ahead, but American politicians think one quarter ahead, or one headline ahead, or one election cycle, midterms ahead. So to your point, these are making huge reverberations. He's a bull or a bear in a china shop, very short-sighted. He does think longer term, and Scott Bessent has said this too: short-term pain, long-term gain. That's their thinking, that this is necessary pain to reshore jobs, make America great again, bring productivity back to America. We lost that in 2001. This is what it's going to take. Of course, it's going to be extremely inflationary because we have a goods deficit, the highest in history. So how are we going to pay for these higher priced goods? The irony is, Egon, the good news is, oh, don't worry about inflation because there's going to be such a weaker demand, i.e., a recession, and probably because markets are going to crash. Those are very disinflationary forces. That's very funny. Basically means, well, on the back of the middle class or the average American, you're just going to have lower demand, higher recessionary forces, and probably a market implosion. So that'll take care of inflation. That's a painful way of dealing with the inflation causes of these tariffs. So to your point, yes, absolutely short-sighted. They would argue it's long-sighted, that this is necessary. Jim Rickards thinks it's the best thing we've ever done in our policy, etc. We got to do this. I remind people, to your point on history, we tried this in 1929 when we had an over-levered bubble economy, debt-soaked economy. McKinley tariffs came in. Within 3 years, the Dow lost over 80%. In the Great Depression followed. Does history rhyme or repeat? We'll see. Some will say this is a necessary measure. It's a desperate measure, but we have to do it. But be careful what you ask for, because this is going to not just disrupt stock markets, which we're going to break for a number of any reasons anyway,
but when you say
but what
that
this is going
it's
to
going to,
do to global politics, geopolitics, extraordinary. Yeah,
well, and to the world economy, the sad thing is, this is not going to take care of inflation. The inflation curve and interest rate curve, turned around 2021, having gone down since rates having gone down since 1980. So that was a 40-year cycle. That's turned. I'm
yeah,
absolutely determined that that's the case. So inflation is on the way up now. And, I thought we would have maybe a short-term rush into bonds when stock market crashed, only short term because long term said bonds will sell off, which means interest rates go up. But here we only the short term rush into bonds seems to have been 2 days.
I know,
I
and the
don't
yields
know
are
if
actually
this.
going up.
Yeah, rates are good now. The
Yields
10
yields are
years
going
up
up.
again.
Well, think about it too, to your point, how short-sighted this is. Who's the traditionally biggest buyers of our debt? U.S. debt is China and Japan. China is no longer going to be buying U.S. Treasuries. They'll be selling.
No, yeah,
And who will be buying U.S. Treasuries? It's going to be bazooka money from the Fed, inflationary. We may see
inflationary,
disinflation.
exactly.
Absolutely. The inflation is the end game here, no doubt. We
Yeah,
may see
yeah,
disinflationary forces, but the
yeah,
only way to solve this lack of love and trust for a weaponized, over-indebted U.S. IOU is for the Fed to print money to buy it. That's inflationary currency debasing. Couldn't be a more perfect scenario for gold, which is why
no,
treasuries aren't the tier one asset anymore. It's not the safe haven. Even in this recent carnage, treasuries haven't been ripping, they've been falling. That's an interesting sign. And what? Gold is holding its own much better than US treasuries. And relative to the stock market volatility, it's doing its job. But I mean, that's my question to you, Egon, as well. In the midst of all this craziness, many people are still waiting for gold to fall off 30-40% like in 2008 in a market crisis. Is this a crisis like 2008? To be determined. But gold is in a very different macro setting now. It is a tier one reserve asset. It is a safe haven. US IOUs are not. And yet people are still waiting for a dramatic pullback in gold to understand it. How can you help people understand that this is a different world now and that gold is a far better savings asset and tier one asset and reserve asset than an IOU from a broke Uncle Sam?
yeah. Now, that's obviously something that we both have and have been thinking about for a long time. And I've been very clear what was going to happen this time. Everybody has feared a 2008 uh, fall in gold, which was quite major. Of course, it had been going up from 2000, around 2000 to 2008. So, but when we saw the 2008 fall off in this, global markets, stock markets in particular, the gold to some extent followed for I think about 6 months or so, whatever it was. Um,
Mm-hmm.
uh, this time it's very different, as you said, and I've made that clear for the at least last 6, 12 months that gold is not going to fall with the market. Gold is in a totally different situation now because the world is in a different situation. But just take 2008. I think uh, U.S. debt was probably around, I think it was around 9 trillion US debt, federal debt. 9 trillion. What is it today? Over 36, going for 37 trillion. And as I see it in the next few years, this deficit is not going to be just 1 trillion, it's going to be 2 trillion, 3 trillion, 4 trillion. And the debt is going to grow exponentially because of all the problems we have in the world. There'll be obviously the economy will be poor or bad. There will be tax revenues will be very low, and there'll be one rescue after the other of the financial system, of banks going under, etc. So there'll be more money printed than ever, which means high interest rates, higher debt, higher deficits. In that scenario, gold is not going to go down. Gold is going to go up because, and now, as you pointed out, people have been speculating in stocks, in private equity, in credit, in property, in bonds now for well the whole of this century at least.
Mm-hmm.
And it's been absolutely, trees growing to heaven. Nothing can go wrong. This
Right.
is like at the end of every speculative era. 29 was the same. The day before the crash, you read how this is permanent now. This is now the golden era. But
Mm-hmm.
it isn't, and it stopped. But this time around, I thought that when stock markets were going to crash, which I expected for a long time, that possibly for a short while there'll be a rush into bonds. But the market is more intelligent this time. They see
Mm-hmm.
that bonds have zero value. Government bonds have zero value for investors. It's only the Fed who sees value in it
Yeah.
because they have to, because they're the only buyer. But for the rest of the world, they see now that the US is never going to repay the debt, and they might turn it into a 100-year debt instead of 10-year debt. It might be even interest free. They postpone interest payments. So the value of those bonds are virtually zero from the point of view of the debtor. The US is not going to be repaid that with normal money, with only funny money. And
Yeah.
number two, because of that, because of the growing debt and the inflation and the deficits, the dollar will collapse. And so
Yeah.
will other currencies, of course, not just the dollar. All currencies will collapse. But some people believe that the dollar was going to go on forever, but it isn't. And therefore, so if you buy an instrument which in a currency which is going to collapse, and a debtor which is going to collapse, which is the US in this case, you shouldn't touch them. So therefore, people are not going to buy bonds, maybe temporarily, but it looks like not even that. So you can't hold stocks now because stocks are now entering in, as I see it. This is not just a pullback, a correction that people will be talking about for the next few months or 6 months or whatever. Everybody believes a correction, tries to jump on it, and then it goes down again and down again and down again, as happens when a secular bear market starts. And that's what we're seeing now. This could be a 10 or 20 or 30-year bear market in stock. Never goes straight down. It has its sideways moves. It has its corrections. But the long term could be at least as long as 29 to 54, 25 years when the Dow, which it took the Dow to recover after the 29, 32 crash. So this could be a long bear market in stocks, in credit, private equity, for example, which has been where everybody has believed that you could get 20, 30, 40% returns forever. Now, all of a sudden, they realize that all they have is illiquid investments. Not even a lot of them are not even quoted anywhere. So therefore, and there's no liquidity. So that will be a massive problem area, as will the credit markets, as will property markets. Now, even people have been, when the wealthy gets too much money, they go into fringe asset classes like art, cars, wine, etc. But that's not going to hold those markets either. They're also going to crash. So sadly, the choice is now very, very narrow for investors. We have been looking at preserving wealth, and therefore for our investors and ourselves had a major percentage in gold and a little bit in silver for 25 years. The markets are waking up to gold now and believe that maybe we should have some gold. They're not going to, still is only 0.5% of world financial assets, and there's not enough gold for people to go 100% into gold globally, and that's not going to happen. And of course, even people who want to invest through us, and other people who are not thinking of gold yet, they say, well, it's gone too fast. I'm going to wait for a pullback. And we've been telling them, and I have been telling them, gold is not going to correct in any major way this time. So if you wait, at some point it will, but from what level? I have no idea. 5,000, 10,000, whatever it is. So therefore, you are not waiting for gold to correct will probably mean that you miss the market. And gold is not an investment. Gold is wealth preservation. And that's the only way to look at it. So therefore, this is going to be very interesting because you're looking at now global markets coming down, bond markets, property markets, and stock markets. And where can investors go? And that is going to be a major dilemma because they can't all get into gold. You can't produce more gold than 3,000 tons a year that we're doing now, that mines are doing now, plus a bit of scrap gold. And therefore, the only way to buy gold and get gold in quantities to pay up for it, as the gold prices are going to be a lot higher. There will be a revaluation of gold by multiples. And but what people don't understand, this is driven by debt, not by tariffs. And Matt, you're a specialist on debt because you're born in America and you know of nothing else.
That's
But
that's
not
the
yourself
American dream.
personally, but
That's the
not
American
yourself,
dream.
but But
Yeah.
a country that can only survive on debt, whether it's federal debt or whether it's credit card debt or car debt or student loan, etc.
Yeah.
Tell us
No,
a
I
little bit
mean,
about the debt
it's
market.
a very good point too, Egon. I mean, what you're making. I mean, literally, the American model is Western model. It is the Keynesian model. It's basically debt has advantages to a point, but like the Greeks and Roman philosophers said, moderation all things. We've taken debt way past moderation. The Austrian school, which is not taught in American high schools, colleges, or business schools, says that debt, when overextended, destroys the nation, destroys the currency. We've written and talked about this quantifiably for years. Americans, and certainly American politicians, the vast majority of them have zero understanding of history and economics, let alone the Constitution, ironically, just don't see this. And I think that's what's very scary. Again, every crisis is a debt crisis, which becomes a credit crisis, which becomes a liquidity crisis. This is nothing new. Sadly, Pavlovian investors still think the next 10 years will roughly be like the last 10 years. The Fed will save us. Every dip is a buy, and we'll get through this too. And to your point, this is a structural systemic problem that has now hit a tipping point. And I think to think of the next 10 years like the last 10 years is very dangerous. There's very few places to hide, very few asset classes. You and I have seen this with family offices looking to unload their private credit pools, which are the new weapons of mass destruction. They're marked to tier 4 status. There's no real market or liquidity for them. The S&P is far too overvalued and volatile. But all this debt and this idea, this fantasy that the debt isn't a problem because the central banks or the government or the Fed has our back is a misunderstanding of history. Because if no one's buying that debt and productivity doesn't surpass that debt, or tax receipts don't surpass that debt, or income, you have a massive problem. And that can only be solved through chaos and desperation. The tariffs are a form of desperation. The Bitcoin strategic reserve is a form of desperation. All these desperate measures are a form of desperation, but inevitably, we're looking inward, as Ray Dalio said, because there's massive shifts now. Geopolitically, the dollar is no longer US centric. Trade with de-dollarization, the rise of the BRICS, all of which have their own problems, but they're moving away from the dollar. The indications that the US and the US dollar and US Treasury, now weaponized, are no longer the center of the world is obvious. It's no longer safe within our own border. It's going to be debased and inflated. And even politically, there are so many changes. So we are absolutely aware of history in motion right now. It's hard to see when you're in it. But
Yeah.
these are not just headlines or themes. De-dollarization, debasement of currency, debt as a destructive tool for all history are part of sound economics and unsound disasters, which we are seeing now. And again, this is ultimately not a tariff crisis, although the tariffs are a disaster in a lot of ways. It is a debt crisis. And these desperate measures are the response to a debt crisis. It's a far little too much too late. And as I've said many times, Santa Claus, Mother Teresa, 5 Nobel laureates are not going to solve this debt crisis now. And I think these tariffs are going to make it more volatile for the markets. I mean, the VIX at 53 and counting. It's incredible. Treasuries not being overbought. It's incredible. People need to look at the history of markets, the history of tariffs, the history of debt, and they'll see that the only solution is going to be debasement, financial repression, higher currency destruction, more desperate measures geopolitically. Even a reset has to have credibility. All of these things point towards physical gold. This is not a gold bug selling your book story. This is history. This is math. This is common sense. You've known it for 25 plus years. You bought in early, but it's not the price appreciation you were chasing. It was an understanding of sound money and the notion that to be rich, you have to stay rich. You have to preserve your wealth. This is not a speculation, get rich quick asset. This is a don't get poor, don't get exploited asset. And I think more and more people hopefully will figure that out. But to your point, even family offices and sophisticated investors are still speculating in SPACs, private credit pools, private equity, hedge funds, playing the old game like history doesn't change. Well, history is changing right in front of us.
Yeah. And a lot of people still believe in this reset, and nobody knows what they're talking about when they say reset. I
Right.
say, when I ask them, what do you mean reset? What kind of reset are you talking about? That people believe that first, before it was the World Economic Forum, they were going to do the
Yeah.
reset. Their power is now just plunging, which I always said it would do, because such an artificial, horrible
Yeah. Horrible.
conglomeration
Horrible.
of people who are just opportunists. That was all it
Yeah.
was, nothing else.
Horrifying.
And people are now slowly or too slowly going away from that. So the World Economic Forum was never going to reset the world because they had no power whatsoever, although they believe they did, led by Schwab, of course. Uh, um, Now, the other reset that you could have was, of course, America resetting the world. But what's America? What kind of reset could America do? Reset to gold that they probably don't even have 8,100 tons. That every new government in the US, every new president sends one of his top guys and look at the gold in Fort Knox and say, yes, the gold was there. I saw it.
Yeah, yeah. Trust me.
He saw one gold bar or a couple, and whether it
Yeah.
was genuine or not, he has no idea. And with the 8,100 tons are there, they're obviously in three different vaults at least. They probably are not there, or if they are there, they've been leased anyway to the market. So they can't. If whenever America tries to revalue the gold, which they're not that stupid, they know that they haven't got it because every time they've sent someone to check the gold, they've always come back and said, yes, it's there. They never, because before Trump was elected, yes, we're going to audit the gold, all of that. It's not going to happen now again.
Yeah.
So they don't have, America doesn't have the gold, most probably not. And therefore, if they try to revalue the gold, to boost the balance sheet. That's just anyway the paper action and not with no fundamental change in the economy. But nevertheless, if they did that, um, China would say, or Russia would say, or India would say, "Show us your hand.
Yeah.
Show us. Tell us. Show us. Let's see an order. Let's see if you have the gold that you're saying you're having." So that's not going to happen either. And my view has always been there's not going to be an orderly reset because even if America tried something, the rest of the world would just laugh at them. The power is now at an accelerating rate shifting from the West, a bankrupt West with a bankrupt monetary system, to the East and to the BRICS countries. And they are buying the gold, and they have the gold. The West is not buying any gold today at all. Nothing. Central banks in the West are not buying gold. It's only the East and the BRICS countries. So that's where the power is already shifting to, and they have the gold, and therefore they will not accept any reset that America tries. Anyway, I don't think there'll be a reset. The only reset I see is a disorderly reset. And that's what happens at the end of a monetary era. We will have a banking collapse, a credit collapse. We will have collapse of governments going and coming, and even leaving before the period is over. Vote of no confidence, or whatever way they get them out. We will have social unrest in Europe and in America. And it's going to be an ugly end of an era that sadly always is the case. And people have to be prepared for that. It's not easy to prepare. Most of us go on with our daily lives, of course, but people should think about, can I protect my assets in a little way? And if I have a few dollars, I can buy grams or tenth of grams or tenth of ounces of gold. I can buy a little bit of silver just for a rainy day. That certainly helped people in Venezuela. When they got their hyperinflation, for example. So there are ways of saving for everyone. But most people are going to suffer. And a lot of people will lose their jobs. And, Social Security will disappear. There won't be any money. And if they print money for Social Security, that money will be worthless. So we're going through an era now that I've been expecting this for a long time. It's taken longer than I thought. But since we recommended gold for wealth preservation purposes only, it's up 10 to 12 times depending on the currency. And that's just for the strong currencies, so-called strong currencies, Western currencies, not for the weak currencies. So that where, if you take Turkey or Venezuela or all of these, or many, Argentina, etc., where, of course, the currency has collapsed and gold gone up much more. That's the kind of era we're going to see in the West now also. So protection is so important. And, I urge people, don't wait for gold to pull back. You're not going to time this right. There will be pullbacks. I don't expect them now. So just buy a little bit of gold for the rainy days. And we're going to have more than one rainy day. We're going to have a long, long storm for many, many years to come.
Yeah.
And therefore, people must think about doing what they can to protect themselves. You can't protect yourself against civil unrest. Everybody can't just move out somewhere, to a different country, out into the countryside, etc. So that is going to be a problem. You just have to be careful, and your city centers will be one of the worst places. I've mentioned to people, just in the UK, there are 50,000 registered terrorists, 50,000 registered. And it's not the terrorists that are registered, it's the government that registers them. And they are organized, and they are planning to attack infrastructure, etc., water, energy, etc.
Yeah.
So that's just, and then we will have certainly the same in Germany, in Holland, Belgium, France, Sweden, etc., where we have now, major change in the population, with a big number of immigrants that all these countries have not taken care of properly, and therefore they are going to be unhappy with what they have in these countries that they now live in. So, and you will have right-wing parties growing, and Nazis, etc., fighting between Muslims and Nazi right-wing parties. So it will be very unpleasant. I hope I'm wrong, of course. If you look at history again, Matt, it has always happened, in various forms, because we haven't, we've always had immigration before in the world, but that's immigrants have actually looked after themselves, like in America. They got there, and they created their own lives. Now it's socialist governments that have just paid them money, and not integrated them in society. So it's appalling what has happened. It's sad to finish on a low note, but this is nothing different to what I've said for the last 25 years. But I know nobody listens, because when the stock market goes out, nobody's interested in protecting the risk. You mentioned family offices, man. Family offices, their responsibility is to protect generational wealth. On average, a family office, and this is a very, very big market. They hold also not less than 1% of gold, and they're supposed to protect generational wealth. And people are now being shocked that overbought and overvalued bond markets or stock markets are going down. But that's what money managers are not paid for markets going up. They're paid for protecting risk. Number one, and number two, getting
theoretically,
and they don't do
theoretically,
that.
Yeah.
So
Sadly,
there'll be some horrible things happening to the investment industry will collapse totally. All these overpaid investment managers, wealth managers, etc. I mean, they're just going to disappear, because the performers will not be there to pay them, and people will be very unhappy, and they will flee to safety. And my prediction is that gold is going to be permanently revalued. When I say permanently, for decades at least, from 0.5% of world financial assets. I think now, over time, people will hold, or investors will hold, 5% or maybe 10. There isn't really in order for 10% to happen, you need to have a massive revaluation of gold, because there's no way they can buy 10% at these prices. But that might very well happen. So I think we will have, and people will hold gold for a long, see it as a long-term core holding in their portfolio, which hasn't happened for the last 75 years or so. So there will be a massive revaluation. Short-term silver is going to go up faster than gold, 2-3 times faster. It's more volatile. It's not the same degree of wealth preservation, but that's a short-term wealth preservation combined with investment with a high risk. It's still a very, very good opportunity right now. So for investors who actually are prepared to cut their losses, which most are not. They're all going to wait for the pullback, which is not going to happen. In the meantime, gold is going to continue up. But for the investors who are clear enough about what's going to happen and take that decision to, I'm going to get out now, cut my losses. I see what's happening in the world. This is not going to end well, and I will protect myself now. And nobody's taking losses. It's only losses from the top. Most people have made a lot of money in the stock market, but they are greedy and they want to get out of the top. But the top is gone, in my view. It's never going to happen. And again, and gold or stock markets against gold, I still hold to my old forecast that I think stock market, whether it's the Dow or the Nasdaq or whatever it is, are going to fall about 90% against gold in the next 2 years.
Yeah.
Interesting situation for the people who actually are prepared to take the decision, Matt. Do you
Yeah.
think they will?
Well, I mean, it's sad because I think many people, my cat, my assistant here, I think many people are woefully unprepared and unsophisticated. Even at the high end level, I've worked in family offices. They're very bright people, but they're very consensus thinking. Again, almost conditioned to believe that we're too big to fail, that there'll always be a solution. It's never going to work. It's monetary debasement now. It's the only solution forward. It's financial repression. As you were saying, there's a list of other social unrest, these tensions geopolitically, nationally, internally. Again, we're no fun at a cocktail party. These are just historical trends. In terms of preparation, it's usually too little too late. There is a slight understanding increasing now that everything is breaking down around them. And so there has to be some solution. People are slowly catching on. But the man on the street, sadly, to your point, anyone can afford some grams, but many of them don't even have the money to get through the month. I was talking to my mother. I mentioned this in a recent interview. It's quite sad. In my hometown in Michigan, which is a good classic example of strong Midwestern America, uh, these are proud people. They're hardworking people. They're not sophisticated on Fed policy, interest rates, bond spreads. Why should they be? But they're feeling it. They're broke, and there are signs. I'll wash your car. I'll wash your car in front of their house. People are, they're stressed. They're indebted. I see in my little village in France, you have to pay to take your trash out with a little card. An old woman needed help just to take the trash out. So this is quite tragic. So for many, many people, it's not even a question of having any options. Most people have some options. The ultra high net worth have no excuse now to be caught off footed like this, to be in SPACs, credit pools, private equity, and a bubbling stock market. They're not managing risk because they're thinking as groupthink. They're woefully ignorant of history. And that, again, no fun at a cocktail party. When markets are rising, everyone from a Goldman Sachs alumni pool looks like a genius. When markets tank, for obvious reasons and obvious signals, they blame it on an extraneous event, couldn't be seen, black swan.
Exactly.
It's
Exactly.
disingenuous. It's
Yeah.
disingenuous. It's groupthink. It's
Yeah.
banker think. It's Harvard think. It's Wharton think. I've seen it 1,000 times. You've seen it from Switzerland. I've seen it from Wall Street. It's not to call everyone a fool. They're trying to get by in a system that doesn't reward honest thinking. Everyone has to be a bull on Wall Street or you don't keep your job. Bearish is cynicism. It's bad for business. What we have the advantage of is having no constraints by a corporate board or shareholders. We can speak what we believe is the honest, blunt truth. What people do with that is up to them. But the evidence is all around us that we have a debt crisis, a credit crisis, a liquidity crisis, a currency crisis, and a world moving away from the US dollar and the US Treasury. It's overwhelming. So
Mm.
there's no excuse not to look into that. Do your own homework, figure this out. Don't just call us gold bucks selling our books. Do your own homework. You'll see it. And more people, certainly the central banks of the East, even the BIS, of which I'm no friend, sees it. So the evidence is there if you want to find it, and you can decide what you want to do. Facts are stubborn things, but you have to decide what to do with those facts. If you want to save in U.S. Treasuries and risk yourself on the SPACs stock market, that's your call. But
Yeah,
we're in a,
what
we're in a sea
investors
change.
have to remember, we are not trying to be sensational. You know, what we are seeing clearly, and we've been predicting it for many, many years, and I have for longer than you. I'm older than you, and I've seen
Older than
it
one.
coming. Uh, uh, and this is not sensational. This has happened time and time again in history. The only major difference today is that we're talking about the global market. That has never happened in connection with a major crisis before. We never had these
Yeah,
global markets that are totally interconnected. That's
yeah,
why the fall this time will be so much greater than has ever happened in history.
yeah,
And it will affect the whole world. Uh, but we warned everyone. we have talked about a very simple solutions. It doesn't solve all the problems at all, with the social unrest or with people not having a job, etc. It doesn't solve everything, but at least it helps some people to see clearly what the risks are here.
Yeah.
And of course, as I always say, Matt, there are so many. Sorry, my phone is ringing here. There are so many other important values in life, whether it's not number one, always family, or look after your family, take care of your family. It's more needed than ever now. Same with near friends, help people as much as you can. And then, of course, there's so many free things in life, as I keep on repeating. Nature is the most wonderful thing there is. Costs nothing to go out in nature and really enjoy it. Books and music, the same thing. So there's so much that doesn't need material values. We need food, and we need obviously a roof over our head. But except for that, we can lead a much lower cost life than we're leading today. We don't need all the gimmicks that we have today.
Right. Yeah.
So that's what people must think about now. And Matt, we will be back because this is going to be one of the most interesting periods from an intellectual point of view, or and from a historical student point of view, to watch how this all develops. But the trend that the die has been cast, and is now, this is not going to be stopped. It's going to accelerate, and people must be prepared for that.
Yeah. No, we're in a historical turning point. We've seen it coming. It's been percolating right before our eyes in plain sight, and now it's undeniable. We just have to be realistic.
So we thank our audience for listening, and we will try to come back more frequently. But remember, I haven't changed my mind, and I've been writing about this for 25 years, and I have had this exactly the same opinion what was going to happen. So therefore, this is nothing new, and it's not going to change tomorrow or the next day. So we don't. It's only a question of how quickly it unravels this. That's the only question. It's not a point of actually, I hope there'll be a recovery. I hope stock market will come back. It won't come back. It will have small corrections on the way. It never goes straight. But the trend has been set, the die has been cast, and now get prepared for a totally different world. And we don't know how long it will take.
Yeah.
With those words, now we got your background.
Mike, hold on. My cat. We're gonna have to pause for a second.
That's all right.
The cat, because Mal isn't here.
No, that's fine. It's a nice change of scenery. We say farewell now, and Matt, okay. I'll say farewell for both of us. It's quite nice to have a little bit of a comical ending to this. Also, we got to be able to laugh too. So I say goodbye and thank you to everyone.